Welcome back, active investors. Welcome back. And if you're new to the channel, welcome you guys. I hope you guys find this information useful. Today we're going to talk about 7 stocks that I think are the safest to buy. Okay, guys. So here I have 7 stocks that I think are the safest to buy as we analyze the balance sheets and we go through the metrics of these companies and try to figure out why I think these companies are the safest to buy. Okay, guys. So first on the list is Wells Fargo. Okay, Wells Fargo stock price is at 33.20, and we have assets of 1.9 trillion. Okay, guys. We have liabilities of 1.7 trillion, which is quite astonishing, and we have a book value of 40.05. Okay, so if you can buy the stock under $40, then you're getting an undervalued asset. Okay, guys. Here we have shareholders equity of 187.9 billion, and we have a PB ratio of 0.72, which is really good. Okay, we want that PB ratio under 1. Okay, guys, and this is just based on fundamentals. Okay, so this is one company that I think is a very safe company to buy. The company's been here for a long time. It's had its ups and downs, but for the most part it's been hanging on and it's been strong. Okay, guys, we have a yearly revenue of 103 billion. Okay, and we have a net profit of 17.9 billion, which if you compare to Facebook, sitting around 15 billion, that's quite a bit of a chunk there of money. Okay, we have cash on hand of 323 billion, and we have a debt to equity ratio of 1.37, which is not so bad. Long-term debt, we have 228 billion, and we have a current ratio of 0.87 and a return on investment of 5.63%. Okay, we have number of employees 260,000, and these are the numbers for this company, you guys. Here we see a pretty solid balance sheet, and we see a pretty solid company. Okay, so here we have, you guys, the annual revenue, okay, on a year-to-year basis, okay, of Wells Fargo. We have 103 billion, 101 billion, 97 billion, and 94 billion. Okay, which is really good. This is really good. This is exactly what you want to see on a financial statement. Okay, here we have Wells Fargo annual net income year to year: 17.9 billion, 20.6 billion, 20.5 billion, and then we have 20.3 billion. So here you see, guys, company's been stuck here for a little while in the 20s, and just basically the 20s for a pretty long time. So that's the only thing that's been holding this current stock from growing so much. But on the other side, very safe stock to buy. Okay, very safe stock to buy. Okay, well, here we have Chase. Okay, stock price at 102, assets of 2.6 trillion, liabilities of 2.43 trillion, book value of 83.89, shareholder equity of 251 billion, and a PB ratio of 1.10. Okay, so here, you guys, if you can get this company under $83, then of course you're paying a very fair price for this company. Okay, you guys, now everybody's familiar with Chase, just like everybody's familiar with Wells Fargo. Okay, these companies been up here for a long time, and they have lots of assets and cash on hand, and very safe companies to buy. Okay, to consider. Yearly revenue, we have 142 billion. Net profit, we have 34.6 billion. I'm sorry. We have cash on hand of 923.8 billion, debt to equity ratio of 1.24, long-term debt of 241 billion, current ratio of 0.92, return on investment of 8.09%, number of employees 257,000. Okay, you guys, here what stands out to me is the return on investment. Okay, here you have a solid company with a solid balance sheet with a return on investment of 8.09%. You guys, I don't think there's any safer stock to buy, with a lot of still upside on the potential growth of this company. You guys, I think we haven't seen the the the, the end of that. Okay, so if you look at this sheet here, we have the annual revenue on a year-to-year basis. We have 142 billion, 130 billion, 114 billion, 106 billion, all the way down to 2007. Okay, where we can see very healthy growth here on the left side. And now we look at the right side on the annual net income. Here we see a flawless financial history. Okay, we have 34 billion, 30 billion, 22 billion, 22 billion, 22 billion, 20 billion, 16 billion, 19 billion, 17 billion, and you can see how the finances have grown for JP Morgan. Okay, very safe company, very attractive company, the best company that I think out of any other company. And a lot of people might disagree with that, but that's okay. Stock price here, we have a different company called Royal Bank of Canada. Okay, this is I think the top bank in Canada, you guys. Stock price at $63. Assets of 1.0 trillion. Liabilities of 1.0 trillion as well. Book value of 54.99, so the stock is pretty fairly priced at the moment. Shareholders equity of 62.9 and a PB ratio of 1.51, which is a little high, but uh, again, this is a pretty safe company. This company has a lot of equity, has a lot of money, and they're gonna withstand the test of time, and that's what we look for. Okay, companies that can withstand the test of time. Okay, you guys. Yearly revenue, we have 50 billion, net profit of 9.6 billion, cash on hand of 389 billion, which is a lot of money. Debt to equity ratio of 0.12, which is really good. Long-term debt 7.77 billion, you guys. I'm sorry. Current ratio of 91, and we have return on investment of 17.74%, which is a spectacular, you guys. Spectacular return on investment. Okay, you guys. Number of employees 82,000. There you go, you guys. This is one stock that I might just get really bullish on if I get a chance. Okay. Now, Royal Bank of Canada annual revenue, we have 50 billion. Okay, 44 billion, 38 billion, 34 billion, 34 billion, 38. Now here we see a trend, if you guys don't remember on the last slides. Okay, a lot of the companies been stuck during these years for some reason. There hasn't been too much growth in the bank stocks, but it's been growing steadily though. Okay, on the right side we have the net income annual report income. We have 9 billion, 9 billion, 8 billion, 7 billion, 7 billion, 8 billion. Okay, so just a really healthy company. Has been growing slow on its profits, and it's been growing a steady on its revenues. You guys, really safe companies to buy. Here we have Walmart, McDonald's, Disney, and Visa, you guys. These are also one of the safest companies to buy right now. The companies, the only reason I haven't bought into these companies is because um, I don't see too much future growth in them. And a lot of people might disagree, and that's okay, because uh, uh, everybody has their own philosophy in investing. Okay, so you should adapt your own philosophy when investing. Now this video is just for people who might not know, which companies to buy, or having trouble, or maybe just trying to start off, and I need a little bit of push or help, so I hope this video really helps you, um and also help you gain some profits out of this, because there is potential growth in these companies. As far as profiting from these companies, you can get a dividend return, or the company still might be able to grow. They will grow. They will grow. The only reason I don't buy these companies is because they're a little bit overpriced. But honestly, I wouldn't mind buying these companies if I didn't have anything else to choose from. Okay, you guys. um with that being said, guys, please go ahead and hit the like and subscribe button. Please, you guys, it would really help a lot. I really want to keep making this content for you guys. And it'll just help a lot to help the channel grow, you guys. Um, So there you go. You guys stay safe and have a good day.